Hey everybody, this is Josh Taylor, and this morning I actually got an email from one of our customers who watched our training videos and was still not sure how to calculate the risk capital when we send trades to them. So I'm going to go through a short video. We're going to show you how to calculate your amount of risk per trade. All right? Now we're going to use an example, and here's the example trade, and this is basically what one of the trades we would send to one of our clients would look like. It would say sell the euro US dollar at 1.3200. We're going to put a stop at 1.3300, and our profit target is 1.3100. Now this is just a sample trade, but we're going to use this for demo purposes so we can show you how to calculate how many lots you should be risking per pip, so that you do not over leverage your account and you only run a risk the amount of capital that you are planning based on your equity management plan, which we talk about in our members area. Now, in order to determine, first of all, you have to determine how much of your capital you're going to risk on one given trade, and we suggest to our customers, or to anyone out there trading Forex, for that matter, not to leverage more than 2% of your account balance on one given trade. So we're going to use the example of 2%. That we're going to take this trade, where we're going to sell the euro at 1.3200. We're going to put a stop at 1.3300, and our profit target is 1.3100. And we're going to leverage 2% of our account balance. So let me show you the next calculation. Okay, remember that we were going to sell the euro at 1.3200, and our stop loss was at 1.3300. So all we need to do is figure out what the difference is in pips between the price that we're going to enter, the entry point, which is the sell price in this case, and our stop loss. And in this example, it's 100 pips. Okay, it's a 100 pip difference. So let's assume that we have a $10,000 account. Okay, and you're going to risk 2% per trade on, like we just talked about, according to your proper equity management game plan. That means on a $10,000 account, 2% is $200. So on this trade, we are willing to risk $200. If the trade goes against us and we get stopped out, we only want to risk $200. 2% of a loss is not that big of a deal, a couple $100. All right? So we're going to take $200 and we're going to divide it between the 100 pips, which is the difference between the entry point and the stop loss, and we're showing that we can actually risk $2 per pip. Okay? So now what I want to do is let's go to a live example, and I'm going to show you how to enter this trade into the actual software. All right, everyone, here I am in my FX Solutions GTS software, and I'm going to show you how to enter the trade. Now, so we said we're going to sell the euro at 1.3200. We're going to put a stop at 1.3300, and our profit target is 1.3100. Now, the easiest way to tell how many lots per pip you're going to do is, I'll show you this in a second, but remember what we said, we're going to risk $200 on a $10,000 account. Now, this is just a demo account. I set up a clean one for this example, and we're really going to risk $200 spread out among 100 pips, which is $2 per pip. Okay? So every time that price moves up or down one pip, it's gaining you or losing you $2. Okay? So the easiest way to do this, before we actually get into the trade, you click on sell on the euro, and you're going to see this quantity in pip value. Okay, $1. We're willing to do $2. So you see this amount is 10K. If you click the 2, now 20K equals $2 per pip. Okay, so click cancel. And you see this order selection, we're going to do a sell entry limit. Now we only do sell entry limits and buy entry limits. We position ourselves in our trades in advance that if the currency pair drops or goes up to a certain point, that's where we get into our entry. So we always use a sell or buy entry limit. In this case, since we're selling the euro, we're doing the sell entry limit, and we are going to sell here. And since it doesn't tell you the pip value on this screen, we remembered that 20K was $2 per lot per pip, right? So we can click on 2, now 20K. So every time this moves up or down one lot per pip, moves up and down one pip, it is $2. Okay? So, and for most of these accounts, it's 10K. Every 10K is $2. Okay? So we're going to put our entry limit to sell at 3,200. You click submit, and then this pops up. Put in a stop of 3,300, and then our limit, which is where we're going to take our profit, at 3,100. Click save, exit, and the order is in the pending orders section, waiting. Since price right now is at 31.08, it's waiting for price to go up, up, up until it hits 32, and then we're in a sell position. So as it goes down, we're waiting for it to hit 31 again. We take our profit. So that's it, and that's pretty simple. And that's how easy it is, folks. So, folks, hey, if you're wondering where our customers are getting these trade signals, you can sign up. We have a free Forex webinar below, where we offer you several free trade signals a month. You can actually click on in the description below. There's a link, and you can sign up for the free Forex webinar. We're going to show you why 90% of all Forex traders fail, and how to be one of the top % of the Forex traders out there, and how to beat the markets. So, hey, thanks again, and have a great one.